Phil, welcome to the DOS event.
Thank you very much.
Yeah, so we are here with Phil Gillespie, the co-CEO of B2C2, which is a liquidity provider in OTC markets. You do spot, futures, options, a lot of over-the-counter trading. You come from the TradFi world as well as with your the founder. You both come from Goldman Sachs, where you worked on the FX desk. Can you talk to us about how the crypto world is different than the traditional finance world?
Sure. So I guess for a start, it was different, and it's kind of getting similar. And so let's take FX, for example. FX is a OTC-driven market. And when I first came into crypto, and crypto's interesting, right? For the last 10 years, it's been exchange-driven. If you look at where the valuation and where everyone's kind of focuses are, I mean, it tends to be in the crypto exchanges. But what I noticed is that really you're seeing this convergence. The entire market structure is looking more and more familiar to what we had in FX, and it's kind of a very interesting evolution. So for me, it's feeling very much like exactly what we used to do 3 or 4 years ago. And that's one thing that a lot of people kind of miss. In the next 5 to 10 years, I think it's going to be even more similar. So.
And yeah, and of course, the difference between an exchange and over-the-counter is on exchange there are lit orders that everyone can see, and it's best bid. Very different from the over-the-counter market, where often you're serving not necessarily as a market maker, but you're also taking positions yourself. Can you talk about the role, the customers who want to do exposure via over-the-counter, why do they prefer that as opposed to the exchange?
So it's consistency and liquidity, right? So that's one. Let's say there is a sharp move in the market, and we've seen this many times. So let's take the COVID crash, 2020 March. I mean, it was terrible. A lot of exchanges, people couldn't trade. We actually priced continuously throughout the entire turmoil. And we continue to show consistent spreads. So if you go on an exchange, and let's say you're an institution, right? You're a hedge fund or you're a retail broker, you can't just have this massive slippage because there's no liquidity in exchange. So OTC is really important if you think crypto is going to be mainstream. So let's take that example So if it's mainstream, we should be able to buy crypto in our equity brokerage, account, right? Or anywhere. But in order to do that, you need consistent liquidity, you need reliable liquidity. And that's gained through OTC and never through exchanges, because exchanges is too fragmented, it's too patchy. And that's why, all of our clients are just either hedge funds, family offices, retail brokers that needs that consistency, sticky liquidity at all times.
Mm-hmm. And so where an exchange cannot provide that is because if someone wants to sell crypto, if everyone wants to sell their crypto at the same time, there's no one to take the other side of the trade.
Yeah, that's right.
You often, I was speaking to your co-founder, Rob, he was saying often when people think they're dealing with a certain broker, a certain prime broker, let's say, they're actually dealing with you at the back end. Yeah. So how is it that you're able to provide a bid when no one else is willing?
Well, some of that's proprietary secret, but there are exchanges, right? We all know exchanges. Then there's OTC side. There's 2 types of OTC. There's an agency, and then there's principal. Agency is interesting. A lot of the guys who say that they're OTC, they're getting pricing from somewhere else, and they're saying that's their price. They don't create the liquidity. They aggregate it. So there are very few that are principal. And B2C2 is one of the only principal liquidity providers in the crypto space. So the question is, how do we do that? Well, for example, from what I can say is that we're connected to close to 25 to 30 exchanges. And we don't necessarily trade on exchanges because we internalize a lot of the flow. But we have over 500 institutional clients globally. We know the guys who are selling, we know the guys who are buying. And we basically create a mid. So we say this is the B2C2 Bitcoin price, and then create a spread around it. And we're able to offset the buyers and sellers. It's quite quantitative, it's quite mathematical, but we actually form and calculate our pricing and send it out to our clients. This is very different from exchange. Exchanges, people come in, place their bids and offer. Agency is they just rely on somebody else to do it, and they just aggregate it. And the principle is actually solving the liquidity and figuring out where the liquidities are and generating a price. It's exactly what we used to do at Goldman Sachs. It's how we price FX or anything else.
Most of the institutional money that's been flowing to the space, how would you categorize it? Are they mostly interested in Bitcoin, maybe a little bit of Ethereum? Do they mostly want to buy and hold? Do they want to trade around their position, or are they arbitrageurs who want to sort of exploit dislocations in the market structure?
So keyword here is that it's evolving very fast. 3 years ago, it was just basically a bunch of crypto brokers and exchanges that wanted liquidity from us. And then two years ago, it was retail brokers. Now we're just seeing, family office coming in. They want exposure, they want to go long. Then we have hedge funds who just wants to arb. So really, to answer your question, every 3 months or so, that it changes. Mm-hmm. Now I would say probably pure crypto-oriented firms are probably around, I'll say 40% of our total volume. So 60% comes from like traditional hedge funds or family office or other kinds of brokers that used to do equity or FX. It's changed a lot. I mean, a year ago, this could have been like maybe 60, 70% was crypto exchange and crypto broker. Now it's just getting less and less.
And what are, some institutions have rushed into the space, but there are a lot of institutions who are waiting to get into crypto, but they're waiting for some regulatory change to make them feel comfortable. What do you think is stopping them from coming in, even though they want to? And what do you think could be a turning point?
First is regulation. Unless there's regulation, companies can't come in. But we're getting that laid out. So that's one. Then it gets to custody. So is there a proper custody provider? And so on and so on. And then third, it becomes, like a PB offering. It becomes kind of mitigating the counterparty risk and kind of being able to facilitate the trades without having to worry about your counterparties. And this again happens in any other asset class as well, but we're going through that evolution. I think the regulation foundation is kind of getting settled, and now we're kind of in this PB slash, custody solution. And that's what everybody's looking out for now.
So a PB is a prime brokerage. What are the 60% that are not buy and hold that you say? What is sort of the trade? A very popular trade is shorting the futures and then buying the spot to exploit the contango. There are also some options trade. I know you list options as well. You trade them over the counter. There was some extreme call skew in January and February. That was sort of a trade. What are some of the different perhaps nuanced trades that if someone's a casual observer of crypto, they might not know about?
So I'll probably say that probably the most popular amongst hedge funds and other kind of trading accounts is probably the basis trading that you mentioned. So whether it's perps against spot, futures against spot, kind of trading long short positions. So spot, it's delta risk neutral, but they're exploiting kind of the basis deviations. Very popular. From a not so pure alpha side, one of the growths that we're seeing is basically like a dual currency deposits. So, you deposit, you lend the coin, and then you sell an option on top to get some yield. So we're starting to see that, and this might be very interesting. So in Japan recently, the regulators just kind of okayed the product. So this is interesting, right? So now the brokers have a different product that they can go out to clients with. And once that kind of regulatory green light goes around, then you're going to start seeing this product come out. So we've been bombarded with requests to be able to provide these products, which requires you to have funding capability, options capability, spot capability, and everything else. So we're in a unique position to be able to provide those solutions, but we're seeing some pickup in those demands now.
And do you have plans to provide those solutions yourself, or do you want to be sort of an intermediary between other companies that sort of do provide those products?
It's pure, we provide everything ourselves. So we're going to always be a principal provider. Most of the stuff that we have, system and everything, we built it in-house. So we don't rely too much on external vendors. Obviously, we still have to rely for custody providers and others. We're not going to do that part, but everything else is in-house, and we will ultimately provide the whole solution.
And to what degree, when people are buying, do they want to buy just Bitcoin, maybe just Bitcoin and Ethereum? I was looking at a few of your pairs. You have all of the main ones, but it seems like the really big players, the institutional players that you are counterparties to, mostly want to focus on those big ones, right?
Yeah, so liquidity is key. Again, if you are a large institutional account, let's say even a hedge fund or a broker, you need to have liquidity For example, a lot of the regulatory filing, when you want to issue a new coin as a retail broker, you need to explain, the market cap. You need to explain that it's a safe product for people to trade. So the really big guys, they just can't touch small cap stuff. So that's one. That's very important, right? There has to be some kind of large market cap and liquidity in order for people to participate. But having said that, it used to just basically mean Bitcoin. There's just like, that means Bitcoin. Ethereum is obviously getting big. So today we just sent out a research note, like DOT, for example. In the last 3 or 4 months, we've seen DOT volume, explode by 500, 600%, relatively to Bitcoin and everything else. And who's buying and who's trading? I mean, a lot of this is institutional names that were originally only trading Bitcoin. Mm-hmm. So that's, again, evolving, every 3 months, every 6 months. And we're getting clients now more and more comfortable with trading the other large cap kind of coins.
Very interesting. And to what degree do they want to buy U.S. stable coins that can generate high amounts of yield because it fuels people's ability to borrow and then go long?
Yeah, I mean, stable coins, very popular. Some might need it for, collaterals, and some might need to just borrow so that they can post elsewhere and stuff, and, or earn yields. But again, it really depends on the client type. And when it comes to stablecoin, it's a little bit more kind of regulatory sensitive as well. Really depends on where the client's located and whether it's allowed and what's not. So, overall, it's a huge kind of portion of our kind of funding offering. But it really depends on the end client and how they're kind of positioned and formed. So.
And where do you see the biggest growth opportunity for B2C2? Is it macro hedge funds allocating to crypto? Is it crypto native hedge funds? Or is it crypto retail traders who have been so successful that I actually can trade in the volumes that you trade in?
So our belief isn't so much about any particular sector. Our belief is just that OTC is going to end up becoming a bigger and bigger kind of a portion of the trading. So, going back to the whole theory, if we think that crypto is going to be mainstream, and let's fast forward for the next 10 years, right? Let's imagine 2030. I mean, so do we think that everybody's going to still be trading on exchanges? There's 480 exchanges in the world. Or do we think that people are going to actually be able to trade crypto through, your own kind of retail brokerage account? I would think that the latter is probably, more realistic if we're going to say this is going to be a mainstream kind of asset class, right? So our thinking is that right now, maybe in terms of total trading, maybe 60% exchange, maybe 50%. I mean, DeFi is also coming up. It's hard to say. But the proportion of the exchange trading is going to go down, and OTC is just going to get bigger and bigger. By the way, when I was at JPMorgan, when I was at Goldman Sachs, when we traded FX, 99% was OTC, 1% was exchange. So I'm not saying that we're going to get there in crypto, but you have to think, if FX is like that, why would crypto be any different? And, it used to be because of custody, it used to be because of other reasons, but if those reasons are disappearing, naturally OTC is going to grow.
So would you say that you view crypto more in the currency basket as an analog in the TradFi world than, let's say, equities?
No, I think, in terms of the way the market is structured, yes. But I want to be careful here. I'm not necessarily saying that, crypto equals currency, right? That I want to make sure that, because it's a little bit more than that, right?
For sure,
it's a bit of a commodity. It also has different components of different asset class. Yeah. But in terms of the market structure, yes, I think it's very similar to like FX.
Okay, thank you. And that always makes sense. I always like to say that if you're very bullish on Bitcoin, you wouldn't want to use it as a currency and buy coffee right? Because then you're sort of selling your Bitcoin. Phil, my final question is, in the States, we recently saw the emergence of a Bitcoin ETF. Mm-hmm. How does that and the rise of other exchange-traded products around the world shape the market structure as you see it?
Well, so, it's a different answer to maybe perhaps what you're looking for. But to me, the biggest hurdle for crypto is just the lack of education and really, having everybody understand the product and getting engaged. Like some of us, we know crypto. We've been doing this for a while. And I'm sure you have family and friends where you explain it and they're just like, oh, this is a crazy crypto guy, right? But the thing is, the more mainstream we get, the more people understand. And so to me, it's great to see ETFs and it's great to see these things because it just goes to show that crypto is becoming mainstream. And eventually banks and all of these other institutions who might still be on the edge, they might still have concerns for the asset class, they're going to open up because they're going to just literally see it everywhere. And, and then it's FOMO from the institutional side, right? They need to go in. So for me, it's more of the bigger evolution of the whole asset class. And, as we get more comfortable with ETFs, as regulators get more comfortable with different products and asset classes, then, crypto is going to continue to become more and more mainstream and people are going to know what they're doing, right?
Phil, it's been fantastic getting the chance to talk to you, hear your thoughts. Before you go, could you let people know if they want to learn about B2C2, some of your research, as where can they find you? And then also, are there any particular products or projects that you're about to launch that you're particularly excited about?
Yeah, so unfortunately, we're not B2C. So for any institution that's interested, I think just please look at our website, or we partner up with quite a few like strategic partners. So we like to provide market color and information out. So hopefully, if you are an institution that's looking for liquidity or market insight, please contact us through our website or through any of our strategic partners. In terms of what I'm excited about, I think we're in a position. I kind of went on the story about how OTC is going to grow. We're offering all the main OTC products now. We're finally here. We just launched an NDF. We have options, we have a funding desk, we have spot, we have derivatives. And that combination is exciting for me. So now going into 2022, I think that the serious guys that are coming into the space, they need a serious player that's offering everything. And we want to make sure that we're those guys. And we're really looking forward for the market to keep growing.
Yeah, and that can trade in size.
Yeah, that's right.
Wonderful. Well, Phil, thank you so much. It's been a pleasure.
Thank you very much. Cheers. Thank you.